How y'all doing, good people? This is gonna be a video y'all gonna wanna see, man. I gotta update y'all on what's going on with our economy. But before I do that, I wanna ask you guys to do me a big favor. I want you to hit that thumbs up button as soon as you come into the chat, as soon as you start watching the video. Hit that thumbs up button for me because it will allow YouTube's algorithm to get this live stream and this video out to more people so we can grow our community, help more people understand what's going on with our economy, and help more people get to their financial freedom. Also, if you want up to 12 free stocks from Weeble, Weeble is gonna give you up to 12 free stocks when you open a new Weeble brokerage account. Put any amount of money in that brokerage account. They're gonna give you up to 12 free stocks for just trying out their brokerage app. There's a link down in the description box of this video. Go click on that Weeble link. Open up your new Weeble account today. Go get that free stock, go get that free money. I'm gonna also send you a free Weeble tutorial video so that you can know how to use the Weeble app to make your first trade. Make it easier for you to get into the Weeble app and make that first trade to start building wealth. All you gotta do is send me a DM on Instagram at RichardFain28, and I'm gonna send you that Weeble tutorial video. Let me know that you've opened the account, that you funded the account, and I'm gonna send you that tutorial video. Well, all right, now that we got that out of the way, let's dive into why the Fed said that the American people are in trouble. September 13th, which is today, we just got the August CPI inflation report. And guys, it wasn't all that good. Let me just walk you through the data. First of all, before I even walk you through the data, for people that are brand new and don't even know what a CPI report, inflation report is, it's basically a report that measures the increase in prices of our goods and services that we use on a daily basis. We measure it year over year, and they measure it month over month. The higher it goes, that tells us the higher inflation number it is. It tells us how our goods and services are going up in price month over month, year over year. So that's what the CPI inflation report is. And we get one every month, right? Now, if we go back to June of 2022, inflation was 9%. That was the high water mark. And over the last 20 months or so, inflation has consistently been kind of coming down, right? When we looked at the August CPI report, you have expectations that the market believes our economy should meet, right? And when it comes to inflation, for August, the market wanted headline inflation to come in at 3.6% or below, right? That's on a year-over-year basis. Unfortunately, headline inflation came in at 3.7%. So we missed expectations from a headline inflation standpoint year over year. When you look at month over month, expectations was our goods and services would increase in price month over month by 0.6%. We actually met that expectations because that's what the number came in at, 0.6%. So that was good for headline inflation month over month. It would have been even better if we would have beat expectations instead of just meeting expectations. So the year over year number was higher than expected. That's not good. The month over month number met expectations, and that was okay. When we look at core inflation, and that's the one that the Federal Reserve really pays attention to, right? And core inflation basically just strips out energy costs and food costs because it's so volatile, right? So they strip those out and they just look at core goods and services. When you look at month over month for August, expectation was 0.2% increase in goods and services. We actually came in at 0.3%. So we missed expectations for month over month core. When we look at year over year core, we came in at 4.3%, which is exactly what expectation was. So we made that one. Again, would have been a lot better if we could have beat expectations, but we didn't. So, the Fed is going to have to look at that report and then determine what they want to do in their September 19 and 20 meeting, where they are going to have to make a decision on increasing short-term interest rates or not. That's going to be a big decision for them, right? Now, I can tell you what the market believes. The market believes that they will increase short-term interest rates by 25 basis points on September 20th. That's what the market is already priced in. So you won't see the stock market sell off on September 20th if the Fed increases short-term interest rates by 25 basis points. Now, if the Fed increases by 50 basis points, you will see a sell-off because it's not priced in. What did the stock market do this morning when the CPI inflation report came out for August? Since it was sort of mediocre, it was lackluster, it wasn't good, it wasn't extremely bad, the market did have a slight sell-off. Right now, if you look at the three major indexes, at least when I looked at it, they were all in the red because of expectations were not met in some key areas in that CPI report. That's extremely important, guys, that we be able to look at this data, understand what's happening, because it's going to help us as investors, right? See, here's the deal. With inflation above 2%, our stock market is never going to have a long rally. It's never going to have a new bull market, right? We got to get inflation down to 2%, or at least we got to get it close. And we got to get the Federal Reserve to say, well, okay, we're done increasing short-term interest rates. We're going to pause. Better yet, we're getting ready to start reducing. Once we hear that, then we know we're off to the races in the stock market, right? Our stock market is at its best when interest rates are low. Why? Because our stock market is made up of companies. And see, these companies that are in our stock market, although they're large companies, a lot of them don't have a lot of cash on hand. And the way they grow, the way they support growth is they borrow money cheap. And then they take that cheap money and they put it into products and services. They put it into hiring employees. They put into expanding. They put into R&D. That's how most of these gigantic companies, expand and make money and grow and be profitable. But when interest rates are too high, it's too expensive to borrow money, they can't grow. So if companies can't grow in our stock market, then the stock market don't grow, because the stock market is only made up of companies. That's it, guys. There's no magic trick to it. It's just companies. Everybody is not Apple, who has billions and billions and billions of dollars in reserve. Every company in our stock market is not Apple. Most of those companies need to borrow money to fund growth. And when interest rates are high, they can't do that because it's too expensive. So it's very, very critical that inflation comes down. Because if inflation can come down, then the Federal Reserve will start decreasing short-term interest rates, and then more companies can borrow again. And then guess what? They start growing again, and then all of a sudden, boom, stock market starts growing again. We're in a bull market again. That's what we want as investors. And that's what investors don't see right now. That's the reason earlier this morning, when the CPI inflation report came out for August, and it was lackluster, there was some negativity to it, boom, you've seen investors start pulling back. And therefore, your three major indexes were in the red. So, Fed is going to be meeting on February 19 and 20. It's widely expected they are going to increase short-term interest rates by 25 basis points. That's a given. What is not expected is what they're going to do in their November meeting. See, the market believes this is going to be the last rate hike. But I'm telling you, based on the CPI report we got this morning, I'm not quite sure this will be our last rate hike. We may have more rate hikes. The good news for investors is after this September meeting, the Fed won't be meeting again until November, like I said, and we'll have 2 more CPI inflation reports to look at before their November Fed meeting. We'll have September, and hopefully we'll have October. And hopefully, keep your fingers crossed, that in those reports, we see amazing progress against inflation. Because guys, if we don't, the Fed gonna keep raising them interest rates until inflation turns itself around and behaves. As long as the Fed doesn't believe inflation is going down and gonna stay down, they're gonna keep increasing short-term interest rates. And if they do that, again, man, the stock market is not gonna do well. It's not. Now, when you look at the CPI report for August, energy costs were up. Food costs was up. Shelter costs, especially rents, up. The only thing really was down was used car prices. That was down. Used car prices were down. Airline ticket prices were up. Now, you would think with summer over, these kids back in school, some of the traveling has slowed down and airline prices would be down. But you got to remember, this is the August CPI report. We were still in summer. People were still traveling. What we want to look at for airline prices is when we look at the September CPI report. Because kids are back in school, less families are traveling, and let's see if airline ticket prices will be down. May not be down because, of course, fuel is up. The price of fuel is up, and then obviously, you know, airlines, one of their biggest expenses is fuel. So we may not see that in the September. We may have to wait to October, right? But nevertheless, inflation is still being very sticky and stubborn, especially core inflation, right? The Fed want to see inflation at 2% because they believe that's where our economy is the healthiest, is at 2%. Core inflation is 4.3%. That's well above 2%, guys. So, yeah, man, I'm telling you, the Fed said you better be worried. I'm telling you, you better be worried, right? Because if inflation doesn't get itself down, more and more people are not going to be able to afford the basic things they need to live, guys, right? Because at 4.3%, that's outpacing what people are getting in wage increases. Most people get 3%, 4% wage increase. I'm talking about just across the board. But if inflation, core inflation is 4.3%, that means that your cost of your goods and services are going up faster and higher than your cost of living wage increase, right? We can't sustain that is what I'm saying, guys, and the Fed knows that. That's the reason why you better watch interest rates. We know they're gonna raise it in their meeting on the 19th and 20th of this month. We already know that. What we gotta look out for is what's gonna happen in November when they meet, right? For the rest of the year. Because most of us, well, I would say most investors, especially institutional investors, hedge funds, billionaire, retail investors. Most of these people understand that the only way they make money in the stock market short term is if the Fed have to stop increasing short-term interest rates. Now, for us as investors, long term, it presents a great opportunity for us to continue to buy our favorite companies, right? Our favorite ETFs at a discount. Remember what I said, stock market will not flourish. Companies will not participate in a lot of growth unless interest rates are low. right? Because they need to borrow money in order to fund that growth. Great opportunity for us as retail investors. Why? Because we're long-term. If we can buy companies today at a discount and then hold those companies 3, 4, 5, 6 years, 10 years down the road, when they are trading higher per share price higher, then we make a lot of money. That's why I keep telling you guys, there's no better opportunity than right now to transfer wealth to yourself. Because all of these great companies, all of these great ETFs, all of these great index funds are trading at a discount. They're even trading at a deeper discount today because of the inflation report wasn't very good. So investors started pulling back. When investors pull back their money out of these companies, their stock price goes down. But that's not a bad thing for retail investors like you and I who are investing for the long term. See, we're investing 5 years, 10 years, 20 years out. And if we can buy companies at a discount today, and those companies trade at a premium 5 years from now, we just made ourselves some net worth. And that's what you gotta hang your hat on. You can't be running around here afraid and scared that, oh God, I'm gonna lose all my money. No, history tells us you won't lose all your money if you do it right. Now, I'm not a financial advisor, guys. I'm just a guy who has invested in the stock market for over 25 years by himself. Not because I'm an expert, because I understand I don't have to be an expert. What I gotta find is investments that have a historical track record of performance. And I've found those investments, guys, and that's what I put my money in. You guys know I talk about the S&P 500 index a lot because that's where you have the top 500 companies in America in that index. So I go out and find ETFs that track that index. And my favorite ETF right now that I'm tracking, that index, is Vanguard S&P 500 ETF VOO. That's my favorite ETF right now that tracks the S&P 500. And if you want to build wealth, don't try to be the expert. That's the way to build wealth. Lean on companies like Vanguard who already have done the work and have proven the investment works. And that's where you dollar cost average your money in every single month. Month over month, year over year. And if it takes decades, do it decade over decade. Because there's nothing better than owning 100% of your time and controlling your financial destiny. And the only way you get to do those two things, guys, you gotta have assets that generate passive income. So don't be afraid of this CPI report that came out today. Look at it as an opportunity to buy your favorite companies at a discount. The whole premise of the stock market is this: I buy low, I sell high. That's it. That's the premise, right? I buy companies when they're trading low, and I sell those companies stock when they're trading high. That's how you make money in the stock market, guys. There's no magic potion to it. There's no guy out there with some magical system. Now, it's buy consistently over time, and as companies in the stock market increase in value, your investment increases in value. That's the way you make money in the stock market. Right now, for me, there's not a lot of opportunity to make money in residential real estate. I can't borrow money cheap to buy the real estate. See, I don't pay cash for my real estate. I borrow money to buy real estate. And when interest rates for residential 30-year fixed rate mortgages are 7.5%, I can't get the property to cash flow. So I don't buy real estate until I can make cash flow. I can't make cash flow until the Federal Reserve starts reducing short-term interest rates, because short-term interest rates affect the 10-year Treasury rate, and the 10-year Treasury rate affects the 30-year fixed rate mortgage rate. Everything's predicated on the Fed reducing interest rates, guys. I need the Fed to reduce interest rates so that my stock market investments can blossom. I need the Fed to reduce short-term interest rates so I can borrow money cheaply to buy real estate, to put tenants in that real estate, to get cash flow and to get capital appreciation, right? The only thing I really don't need the Fed to reduce interest rates for is if I want to start a business, right? I can start a business with $500. All I got to do is find a problem people need solving. And then I come up with a solution to solve that problem. So right now, for me, that's the only asset class that I don't really need interest rates reduced for in order to make a lot of money. I do need that in the stock market, and I do need it for real estate. But you know something? I'm still double downing on the stock market because I understand it's all about buying low, selling high. So if I got the opportunity to buy low, why wouldn't I take that opportunity? But see, here's the problem with most retail investors. They have no patience. They think, oh, I'm going to buy Apple today, and tomorrow I want to be able to be a millionaire off Apple. That ain't the way it works, guys. Not for 99% of us, that ain't the way it works. The way it works is you buy Apple consistently over the next 10 or 15 years, right? And what are you betting on when you buy Apple every month for the next 10 or 15 years? You're betting that Apple today, right? Let's say Apple today is a $3 trillion company, right? You're buying it today. It's a $3 trillion market cap company. You're betting that in 10 years, Apple will be a $5 trillion market cap company. And that's just an example. I'm not saying that's what Apple's worth. I'm just giving you an example and just throwing out some numbers. See, that's how you make money in the stock market. You bet on these companies. That's what you're doing. You're betting on companies like Apple, right? Amazon, Tesla, Walmart, Home Depot, right? You're saying, okay, Home Depot, you're trading at $300 a share today, but in 10 years, I'm hoping you're trading at $450 a share. So I'm gonna put my money in there. That's how you make money in the stock market, guys. It ain't no more complicated than that. I know people got all these fancy charts and graphs and they use all this fancy jargon and, oh golly, you gotta have all these degrees, you gotta have all these letters behind your name. No, you don't. No, you don't. All you gotta do is go to Vanguard, buy their S&P 500 ETF VOO, and do it consistently for the next 10 years. And history tells us you're gonna make money. I don't tell you that. I can't guarantee you that. I'm just telling you what history tells you. History says you're gonna make money. History says the S&P 500 index over the last 90 years on average has delivered a 7 to 10% rate of return. That's what history says. I'm just going off of history, right? I'd rather take my chances with history than some guy on YouTube. And I often tell you guys, don't just listen to me. Go out and do your own homework. Go do your own research. You don't believe me? Just go to Google, type in S&P 500 index, average rate of return for the last 90 years. Just type that into Google and see what comes up if you think I'm lying. I'm not lying to you. I'm just telling you what is out there, what has happened. I've only done this for 25 years on my own, and I made a 7-figure portfolio doing this on my own, starting with $150 every 2 weeks. That's what I started with when I was 30 years old, and I'm 55 today. So for the last 25 years, man, I've been doing this. Dollar cost averaging, month in and month out, being patient, being disciplined, being, consistent. For most of you guys watching this live stream, watching this video, man, you in the same boat I'm in. Just a small retail investor trying to figure out how to multiply my money and get the financial freedom so I can own 100% of my time and control my own financial destiny. That's what most of you guys looking at this live stream and most of you people that's gonna watch the video to come, you're in the same boat as me. So while you around here looking at Warren Buffett and, oh, Warren Buffett said this, oh, Warren Buffett said that. Look, man, this man got this guy got over $100 billion, man. And the man come from wealth. And I ain't knocking Warren Buffett. He's a great guy. But he ain't, listen, man. Listen to me. I'm not knocking Warren Buffett. I'm just telling you, you ain't Warren Buffett. You can't do the same thing Warren Buffett does, right? You can't. You can't. What you need to figure out is your strategy. Forget Warren Buffett's strategy. He already rich. He already, he giving billions and billions of dollars away, and he ain't giving none of it to you. So what's this whole fascination with Warren Buffett? He ain't giving you a dime, and ain't gonna give you a dime, right? I'm just telling you the truth. So you better find out your own strategy and work your own strategy. Oh, XYZ said this. Oh, XYZ said that, and he's a billionaire. Who cares? I don't care about none of them billionaires. Why would I care? They don't care anything about me. When I open my mailbox, there ain't no check from Warren Buffett. There ain't no check from any of these other billionaire guys who be on TV talking about, oh, do this, do that, oh, here. Listen, man, you better come up with your game plan. And you better come up with it fast. Because time is running out for a lot of you guys, especially if you're my age. Listen, man, if you're 50 years old and you got no net worth and you around here playing around, let me tell you something, man. You're going to go to bed, wake up, you're going to be 70 and forced to work. Why? Because you refuse to get out of your comfort zone. You refuse to find something in your life that's more important to you than your fear, and you stay stuck with your money under your mattress or sitting in some bank account earning 2%. I don't know, man. I'm just telling you guys, you better prepare. You better prepare, right? I don't know what the economy is going to do and don't care. Why? Because I'm going to stay invested. Because I know history tells me at some point that stock market is going to turn around, guys. It's going to turn around, and I'm going to be ready. I'm going to be buying low. And when it turns around and go to the moon, which it will. Why? Because history says it will. And history ain't lying, man. I'm telling you. Following every bear market, there's a bull market. Let me say that one more time. Following every bear market, there's a bull market. Guys, this is not trigonometry. This is just history. This is how the United States operates. Come on, guys. We live in a capitalistic society. You know doggone well we're going to come out of this rut and the stock market going to boom again. Why? Because the 1% going to make it happen. The 1% control 95% of the wealth in this country. Do you really think these people are going to sit around and lose all of their wealth? They're not. No politician can stop that. The stock market will turn around. The question is, are you going to have a net worth gain when it does turn around? Or are you going to sit around and be afraid and scared for the rest of your life, trying to be the expert? Oh, I'm not ready yet. I need to read more. I need to watch more. I need to listen to more. I need to know everything about the stock market. I gotta know everything about ETFs. I gotta know everything about individual stocks. I gotta know how to read a balance sheet and an income statement from a company before I can invest. Listen, man, keep on being in that mindset. Like I said, when you get to my age, you're gonna start wondering when you're gonna ever be able to stop working. Your bones gonna ache a little bit more in the morning when you wake up. Your mind gonna be tired from a life of just working to make somebody else wealthy. Because that's what we do, guys. 80% of the people in the United States work for somebody. So this notion of, oh, everybody's an entrepreneur now. Guys, that's not true. 80% of the people in the United States work for somebody else. They're employees. I'm just telling you facts, man. Go look it up. Don't take my word for it. Go out there on Google and look it up. So what that tells me is 80% of the people in the United States that work are working to make somebody else wealthy, because the person they're working for, the company they're working for, they don't own any of it, especially if they're not invested in the stock market buying shares. Listen, if I'm gonna work for Apple, if I'm gonna work for Home Depot, if I'm gonna work for Walmart, I better own a part of that company. And the only way I get to own a part of that company is I gotta buy their stock. The Walton family ain't gonna let you walk up in there and get 1% of Walmart. They're not gonna give it to you. The only way you get Walmart, to be an owner of Walmart, is you gotta buy stock in Walmart. The Walton family ain't gonna give you any of their ownership. So sorry. The Walton family ain't gonna give you their ownership. right? They're not. These people are billionaires, but they're not gonna give you a dime. What you're gonna have to do is go out and invest and buy stock in Walmart. But if you work for them and you believe in the company and you believe it'll be more valuable tomorrow than it is today, buy the stock. What are you doing? And I'm sure as an employee, you get it at a discount. That's the part I don't understand about people. You work for these companies, these Fortune 500 companies, but you refuse to buy any stock when they're offering it to you at a discount. Why wouldn't you buy the stock? Why would you work for a company you don't believe in? I guess people do that for the paycheck. And I ain't knocking you. I'm just telling you, you got to get smart and start utilizing all of your financial tools to build wealth. Because like I'm telling you, you're going to be my age at one point. You're going to be my age. God's willing. Some of you people are already older than me and still working. Now, don't get me wrong. If you feel like, hey, working is my thing and that's what I want to do for the rest of my life till I leave this place, then hey, man, go ahead and work. But for me, I didn't want that. Not for me. I want to be able to control my own time and I want to control my own financial destiny. The only way I'm able to do that is I got to build wealth. I got to build assets that create passive income. Guys, there's no other way to do it. There's no way to do it. You got to have passive income, right? I don't want to trade time for money for the rest of my life. Now, if you do, knock yourself out. I don't. I've just given you the blueprint to get out of that rat race, to get off that hamster wheel. Just gave you the blueprint. Some of you will accept it, some of you won't, but that's okay. Well, all right, guys, I'm about to wind up this live. I just wanted to tap in with you guys, give you the update on the CPI inflation report for August. Again, it was so-so. Not extremely bad, not extremely good. Just so-so. We got to keep our eye on the CPI report for September and for October because if those two are shaky and not real good, Fed gonna keep increasing short-term interest rates in their November meeting. I'm telling you that's what they're gonna do because the Federal Reserve is not playing around. The only thing they care about is price stability in our economy. That's all they care about. They don't care about some Fortune 500 company. They don't care about, all they care about is price stability. They want prices to be stable so that everybody that live in the United States has the opportunity to be able to buy the basic things they need to live, guys. And when inflation is at 4.3%, everybody can't. And the Fed is not going to take their foot off of the interest rate gas pedal until that happens. So prepare yourself. But once again, it's a great opportunity for us retail investors who want to build wealth because we continue buying these assets at a discount, guys. Continue buying them at a discount. And at some point in the future, 5 years, 10 years, you're going to thank yourself because your net worth is going to increase. And hopefully, you get yourself to financial freedom so you can own 100% of your time and control your own financial destiny. Listen, man, hit that thumbs up before you tap out of here. Hit the thumbs up for me. I really would appreciate it. If you're watching it as a video format, look, guys, hit that thumbs up for me. I really would appreciate it, okay? Hit the thumbs up for me. It's free to do that, and it supports the channel, and it supports me, and I appreciate it. If you want them 12 free stocks from Weeble, you got to click on that link down in the description box. Open up that new Weeble account today. Put any amount of money in it, guys. They're going to give you up to 12 free stocks for trying out the brokerage app. I use the Weeble app every single day for the last, 2.5 years. That's how I transact my business when it comes to paper assets, is with that Weeble app. So rest assured that I use it, or I would not be asking you to give it a shot. So hit that link below, open up that Weeble account. I'm gonna also send you a free tutorial video if you DM me on Instagram and let me know you opened the Weeble account and you funded it. Just send me a DM at RichardFain28. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm gonna catch you on the next live or the next edited video. Peace.